Welcome back to Fast Money. We've got an earnings alert on Qualcomm. Shares are ripping higher in the after hours. Let's get to John Ford for the breakdown. John.
Melissa, a couple things. First, Qualcomm on the call saying their auto design win pipeline is at $9 billion. Also saying that the roll off, I should say, of Huawei's smartphone business to other OEMs is going to benefit them up to $10 billion by 2022. But also want to give you a couple things that Steve Mollenkopf and Christiana Amon told me on a call before the call, particularly about the mix and how they've handled the chip shortage. Mollenkopf said, when we see opportunities to improve the mix and allocate the available supply to better products, we're doing that. You're seeing that in some of the recent strengths in QCT. We do expect there to be improvements in the supply as the actions that we and the suppliers are taking occur, but we're working our way through it. And even with a supply-constrained environment, we're able to get growth in the business. Now, following up on that, Christiana Amon told me, all of our business, we have more demand than supply, but the good thing is we've been able to utilize the scale, take advantage of a lot of actions of capacity planning, multi-sourcing, and two things are happening. I think with all the crisis, we have the ability to get supply to fuel the growth this quarter, next quarter, and now we have line of sight to material improvements in our supply toward the end of this calendar year. So you do see the possibility of some of that easing of supply constraints around chips, Melissa.
All right, John, thanks. John Fort. And so if this comes to pass and Qualcomm is an underperformer relative to the Philadelphia Semiconductor Index year to date, Guy, what happens with this stock?
Yeah. Well, I watched Josh Brown on the closing bell, and he said it's got to get through 150. Technically, he's right. I mean, this 143.5 level or so is where I thought it would hold back in February when it broke down. It didn't. It traded lower. It's cheap. I mean, they have the revenue growth to support a higher valuation. I think it should justify a higher valuation, and I think the stock should be testing that recent all-time high. I think is 165 or so. So I like the name here, but it's disappointed so many people so many times over the last couple of years. Josh is probably right, needs to get above 150 to break out.
Yeah. Tim, what do you think?
Well, they didn't really have to give this kind of outlook on supply-demand constraints and alleviating and better conditions out 2 quarters end of the year. That's bullish. Obviously, the stock reflects it, and I think it tells you that the execution on the management here is they've really been able to get together the supply and the demand dynamics when we know the demand is certainly out there for them. The valuation is far from difficult, and Guy talked about where the stock has been. I mean, that was a pretty ugly period in February. Stock traded down 25%, and for the first 3 quarters of that month, very, very quickly. He's trying to recover here, and on valuation in this space with that better outlook, I think it's going to continue to go higher.
All right, we're getting some headlines here out of the Facebook call, so let's get back to Julia Borson for that. Julia.
Hey, Melissa, I know there's a lot of interest in what's being said about the Apple operating system change. CFO David Wayner saying they just began rolling out the update, so it's very low penetration rates right now, and that they are so they don't really have a sense of how many people are going to be opting in or out. But they say they continue to be concerned about the impact that this update is going to have on the ability of small businesses to use their advertising budgets effectively. And they say, that said, the impact on our own business we think will be manageable. They expect it to be a headwind for the remainder of the year, but they say they're making progress on their own solutions to help advertisers navigate these changes. And then just another comment here about the advertising market in general. They say we're seeing very strong overall ad demand, which is contributing to a more positive outlook for 2021. Back over to you.
All right, Julia. Thank you, Julia Borson. After-hour session highs close to it for Facebook. And, of course, this is a fresh record high for Facebook. Karen, what do you make of the comments so far?
I think advertising demand is really the most important thing. And when you have that kind of revenue growth and you have that operating margin again, you're just going to get huge earnings. And I come back to it. It's really not, I mean, it's up $20 now in the aftermarket, but it's still not crazy expensive at all.
It's interesting that David Wayner guy was saying that there's no real sense of how the iOS update, how that will impact Facebook at this point, because not too many people have actually gone through the upgrade process and opted in or opted out, and yet they're able to factor that into the guidance. Should we be a little bit more skeptical about what they're saying and how bullish they are?
3 years ago, I would have said absolutely. Now, you learn things over time. I mean, I try to learn over time. Like you don't get fooled by the same thing over and over again. And I've sort of gotten myself up to speed. I actually say Hundo P now to people, and they're like, oh, look how woke you are. So the short answer is no. I mean, everything about this stock, the foundation of the stock is still in place. All the other things that we talk about are seemingly ancillary, including when they, they move themselves to Capitol Hill or they do it over a Zoom call. This stock is impervious to everything other than, and I'll say it again, if they somehow fall under the auspices or the eyeballs of ESG, that's the existential risk. Short of that, it should be a $400 stock.
Wow.
Shepard Smith here. Thanks for watching CNBC on YouTube.